And so Jerome Powell came out strong today, extremely hawkish and putting the market back in its place after his somewhat dovish comments in July. I predicted yesterday that I thought Jerome Powell would come out with this hawkish approach. We're going to take a look to see how Bitcoin is responding. Has it accelerated any moves to the downside after Jerome Powell gave his remarks? We're going to summarize his key remarks quickly in this video and try to see what we think is going to happen from here and what I'm doing in the markets. Guys, don't forget to smash the like button. Don't forget to subscribe. As always, check out the links in the description if you want to buy any crypto using BYBIT or BitGet, the two exchanges I use on a daily basis to trade. Those are my go-to. Check out the bonuses in the description if you want to trade any of these cryptos. I'm sitting here on the 5-minute chart for Bitcoin, and you're seeing we have now broken down from our bearish continuation pattern. Initially, when Jerome Powell spoke, you saw that the market wasn't really falling too badly. You had a little rally leading up to the meeting, and then 3 o'clock my time when the meeting started, we started falling, but not crazily, and then we broke down from our bear flag. I'm going to come onto the price target from this and what I expect to happen. But first, what did Jerome Powell say? Well, the first thing Jerome Powell said was he came out and he said that he wants to focus on continuing to bring inflation back in line to that 2% level. Okay, we know that's a focus for Jerome Powell. We know he's extremely focused on expediting that process, right? He really wants to get it back to that level, and restoring inflation, he said, would take some time. He said you could expect a sustained period below trend growth in order to see this happen. And he says there's likely to be a softening in the labor market. Remember, up until now, we've not seen any evidence from the labor market figures that labor is softening. And he, in fact, touches upon that and says that the labor market is indeed very strong right now, but other economic indicators are mixed. He said this will bring in some pain to households and businesses. He says latest economic data is mixed. Economy is showing good, strong underlying momentum, as he calls it, but he says the labor market is imbalanced with demand greater than supply. We know that. We've seen all this. He then says high inflation continues to spread around the economy, okay? And he says, look, the July reading was well welcomed. It was good that it inflected down, but we want to see more before being confident. This is exactly what I said in my prediction yesterday, that look, Jerome Powell didn't want to come across too dovish, right? And he did in July, and that's why we saw the summer rally in equities and crypto followed suit. Because they thought, maybe this means Jerome Powell is going to pause or go down to 50 basis points. So he came out with a mission today to set the agenda straight, to put the market back into stance, to say, calm down. We're not in a moment for you to be excited right now. I've got a job to do. I've had one CPI reading come in negative, come in a little bit better, and the PCE today came in a little bit better. But that's not enough. I've got to keep on doing the work. And I think that was his message. And I think the market heard it loud and clear. Initially, the traders were trading the momentum. We didn't see a big move, but I wanted to let it settle before making this video. It's been 2.5 hours now since that announcement, and you can see now the market is starting to fall to the downside. So we'll take a look at the key levels. He also pointed to 3 important lessons which he thought would be important for us to understand. And the first one he pointed to was that central banks can and should take responsibility. So he's saying, look, it's my responsibility. I need to bring inflation down, and I'm going to do whatever it takes using the tools I have to do so. The second lesson, he said that the public's expectations of inflation plays an important role. We know this, right? Their expectations play a big part, and that's why we look at things like the Michigan Sentiment Survey, because if people expect inflation, it becomes a self-fulfilling prophecy, and that could damage the economy as well. And then he said, 3, we must keep at it till the job is done. And he points to a few historic examples of how history has taught us that if you pivot too prematurely, if you loosen monetary policy too prematurely, it can be quite painful. And he also pointed to Volcker's success, and he said, look, Volcker's success, who by the way is famous for bringing down inflation aggressively, he said, look, the Volcker success in the 1980s came after a period of 15 years of struggling to grapple with inflation, and he had to do it with a lengthy period of very restricted monetary policy. Now what he's saying is he can avoid this by acting now and acting with resolve, and he's saying, look, I'm taking forceful action and I want to get it done. So in other words, what he's saying is, look, while the momentum is there, whilst he's seeing that one notch down in CPI has occurred, that doesn't mean anything. He wants to get on top of this, squish it, extinguish any flame of this before even thinking about pivoting. And he says, look, at some point, which is right, at some point, it will be necessary to slow the hikes. And that is what the market's waiting for. The market's waiting for that point, but I don't think it's coming anytime soon. And I think that backs up my thesis that we could be at some of these levels for quite a while, which is a great opportunity for us to be accumulating Bitcoin at these beautiful prices. So coming back onto here, I'm going to switch over to the 4-hourly chart, and you can see this bear flag paying out beautifully across our diagram as we'd expect. I mean, look at that. Now, the price target, when you take just the conservative move, I took it from about here. Arguably, you could take it from the top of the move, right? So I'm taking a conservative estimate, measuring that impulse wave down to here. That gives you a price target of about 19,200. So that's what I'm looking out for here in the market. Will we come down to there? I'm expecting some support coming in at 20,000, okay? You've got a little bit of support I'm expecting from the psychological level at 20,000. The little bit of support you're seeing coming in now as I'm recording is just from this, but I don't think that's going to last. I think we will need to go down to 20, and then if we lose 20, back down to here around that 19,200 level. The interesting thing with this is you got confluence with this pivot point. Remember, I was pointing to this pivot point as being a level of support. That is the level we're looking for. So I've gone ahead. I've got my limit orders set before the Jerome Powell meeting. I made that clear to you guys earlier. And if we hit 20,000, I will be doing some nibbling through my limit orders. And then the next levels I'm looking at is 19,000 and 18,700 with some limit orders in there to pick me up some more Bitcoin. I'll probably nibble on some more Ethereum at those same times as well. Interestingly, obviously, all the technical indicators will be showing us negative trends. You can see we've been rejected by our 4-hourly EMA. We're now super extended to the downside from that. If we take a look at the dollar index as well, which is also important to look at, you can see the dollar index here reacting with a couple of green red hourly candlesticks. Initially, it tried to break down below here, and then the support came back in, and you can see the dollar index will move on Jerome Powell being hawkish. Dollar index will go up as Jerome Powell is hawkish, which means equities and risk on assets such as Bitcoin and crypto go to the downside. Okay, so you can also see here the S&P on the right hand side. If I just switch on over to the 4-hourly chart, you can see S&P is obviously taking a nosedive as well. Big fall here on the S&P, down Bitcoin down now 4.4% on the day at time recording. Let's take a look at S&P is down 2.4%. NASDAQ is down 3%. So it's a bloody day. And again, Jerome Powell just putting the market back in its place to say, look, you got well too excited and there was no need for that. So let's recap. What have we had this week? A big volatile end of the week after a boring start to the week. We've had GDP revised. So in other words, it's saying, look, we're not in as a deep recession as we previously thought, if you want to believe their figure. Then we've had PCE inflation notched down. Remember, this is the one that the Fed looks at. This is good. We've got a notch down. We expected this because we saw CPI notch down. We need to see the next CPI data on September the 13th notch down as well. That would be a really good feather in our caps, okay? So we've seen PCE data. Now we need to look at what the market's pricing in, and I'll give this a refresh because it's changing a lot today. And what you can see is the markets, 60% of the markets are pricing in a 75 basis point rate hike. And that is what's causing some of this red in the market. They keep yo-yoing between pricing in 50 basis points and 75. Now that he's come out hawkish, we're pricing in 60% of the market is pricing in 75 basis points because he said he's not going to take his foot off the gas. So there you have it, guys. A quick summary of what Jerome Powell just said at today's Jackson Hole Symposium. Tough time in the market right now. But again, these are the levels when you have a great time to accumulate if you have conviction. Look, at the end of the day, it's about getting yourself in a position where you're happy if the price stays suppressed, but also you're happy if the price goes up. I know that sounds really odd, but you've got to train yourself. You've got to have enough in the market that, look, if we went green today and rallied on some good news by Jerome Powell, I would have been okay with it. I've got enough in this market. But also the fact that we're coming down now and potentially going back down to 20,000 and maybe testing those lows of 17,600, dare I say it. What great times to further dollar cost average in and get some more cheap Bitcoin in my portfolio. That's based on my conviction. That's what I'm doing. Let me know what you're doing in the comments below. Don't forget to watch this video here to catch up on what happened today, and I'll see you in the next one.